What's going on, everybody, and welcome back to another video. So in today's video, I'm going to give you guys the breakdown, the recap of a trade that we took this morning with gold, which was the last trade of the month, which played out beautiful. We were able to call this trade out completely for free, as you guys can see right over here. Played out beautifully for a 1-3 risk to reward over 240 pips. So in this breakdown, I'm going to explain to you guys this impulsive move that gold had towards the upside, the big retracement that gold had down, and how exactly were we able to capitalize off these two patterns over here. So to give you guys a quick rundown of this month, this is pretty much the trade that we took this morning in our account management, which we were able to make over $5,400. So as you guys can see, this is the profit of today's trade. And then we're going to show you guys the profit of the month. So we're going to go from September 1st all the way to September 30th, which is today. Today's the last day of the month, which we finished very nice. Very good month. This month we were able, in this account management, we were able to bring over $35,430, which is honestly the biggest amount that I've ever seen in my trading career. This is an account management, so obviously this is not the money that I'm going to keep 100%, but in the account management with this large amount, we were able to bring in over $35,330 or $400 with every gold trade that we took. So we're in a very strong win streak. So with that being said, I'm just going to give you guys the breakdown and explain to you guys pretty much this impulse move, the retracement, and how exactly were we able to capitalize off this pattern. So let's get started. We're going to go here very quick. I have all the notes that I wrote down this morning on the setup that I took. My computer's a little bit lagging right now with this recording, but these are pretty much all the notes that I have written down for today's trade. So let's go back right over here. So these are the notes that I had for the setup that we took today. So if you guys look, we were looking for a buy position. We have the weekly, the daily, the H4 structure is completely bullish. We all know that. Price dipped into a higher time frame demand zone, which is what I'm going to explain to you guys. We had a strong rejection and a reaction of the demand zone. We also have the rejection of a fair value gap. We also have the rejection of the VWAP, and price was holding above the previous day's highs, which is holding as a previous or interday support zone, right? Right over here, I have the other note, which it says that price had to come back down to retest the key demand zone, flip the institutional orders and pick up liquidity, and then flip the previous resistance into an area of support. So look at this chart of gold right over here. Price pushed up very strongly starting from this point over here, which is going to be, this was on Monday. So you see this big push towards the upside, right? Whenever the market moves up that quickly, it usually leaves behind an area where a lot of buyers still have orders willing to get filled up, right? So technically this is where, let's say, I'm giving you guys an example. Let's say that 80% of buyers stepped into the market right over here, living a very strong impulse move towards the upside, right? So this is technically an institution move towards the upside. This retracement towards the downside was pretty much price action, grabbing liquidity towards all of these entire previous zones from here and filling up the on-field order, which was the buy position, obviously, right? So it works both ways. We can look at it from a buy position, and we can also look at it in a sell position. So for example, let's say this over here is a supply zone. We saw that seller step into the market right over here. This over here was a retracement, which is most likely, grabbing liquidity to fill up all of this on-field order, which was a sell position, right? So in today's market, in this case over here, we were looking for buy position. So right over here, we left a big orders where buyers previously stepped in, which was active. We had a big impulse move towards the upside. We had a retracement to fill up this on orders over here, which wasn't filled up, where price action managed to fill up to start pushing the market back towards the upside. That's pretty much what we're looking at over here on an intraday time frame. Now this gray box was pretty much the areas of interest of the day. Another way to say the areas of interest is going to be known as the buyer zone, right? So pretty much when I like to mark up my areas of interest, I like to look for high probability zone where price action have a higher probability of having a retracement and a reaction from it, right? So for in this case, this was our demand zone. This was our bullish fair value gap. Price action pretty much had an impulse move towards the upside, which as you guys can see in this note right over here, this was an imbalance move. An impulse move moved up, left on field orders, right? So technically yesterday, whenever we had this impulse move towards the upside, technically this retracement over here, like I was explaining to you guys, this was a zone where price action was high probability of having a reaction from it, which is exactly what price action did. So this was our buyer zone. We also had a sell zone marked up right over here between the 38, we can say the 38.36 to the 38.40, but notice how price action we broke out of it Price action came back, retest these previous day's highs over here, which turned into a support. So this support over here managed to push the market even higher. So our sell zone was invalid, but our buy zone was valid. Now, another thing that I'm going to point out here, which is very important for you guys to understand, whenever price action starts having these imbalance move towards the upside and then start having these type of retracement towards the downside, right? It will work both ways, a buy move, and it will also work on a sell move, right? So usually whenever price action have these imbalance move towards the upside, so just exactly how I have it written down in this notes right over here. Imbalance move, right? This was an impulsive move, moved fast, it left unfilled orders, right? So usually whenever price action starts having this impulse move towards the upside, that means that there is still unfilled orders over here. So there was a few things that happened right over here last night, probably during the late London session, right? Late London session, maybe early New York session as well. If we pretty much trade, support and resistance, right? Whenever you're trading that concept, right, we're basically waiting for price action to break out of resistance so we can come back and retest it, use it as support so that we can continue pushing price even higher, right? Now, again, since this was an imbalance move, it was an impulse move that happened very quick, with which we had the breakout, and we started having the move very quick towards the upside. Again, keep in mind, it left unfilled orders, right? So if you trade the support and resistance, this is where the late buyers started stepping into the market. And whenever they step into the market, most likely they were getting stopped out of stop loss due to the fact that price action was having a huge retracement towards the downside. This huge retracement over here is also known as a liquidity grab. So again, that was the first mistakes. A lot of late buyers were being stepped into the market. A lot of buyers were getting stopped out of the market. Now, the bigger players, the smart move players, right, they pretty much waited for price action to come back towards these demand zone, which is also known as the orders, or the zone where price action had unfilled orders. So the bigger players, they waited for that big liquidity sweep towards the downside. They waited for price action to have a retracement and a reaction towards these levels, and they started buying price at a discounted price, right? So they waited for the reaction of this demand zone over here. They waited for those traders to get stopped out, and they waited for price action to start forming a different character from a bearish market to a bullish market. Same thing will work out if you guys are looking for a sell position. We have a supply zone over here where sellers started stepping into the market. We broke out of this entire support over here. If you trade support and resistance, you most likely would have gotten stopped out over here due to the fact that we had an imbalance move towards the downside, which also had a supply zone where price action still needed to come over here and fill it up. So all of this was liquidity grab towards the upside, stopped out all of these entire fake buyers, and then started heading towards back the downside, right? Very simple. So those were the two main things that happened with this imbalance move towards the upside and the imbalance move towards the downside. Now I'm going to explain to you guys exactly how we were able to capitalize off this imbalance move and how exactly we were able to secure a 1 to 3 risk to reward with this simple setup. So during the late London session and early New York session, right, we already saw that price action had a big retracement towards the downside. We already saw that price action started having a reaction and a rejection of this entire demand zone over here. So during the early New York session, price action already had the first break of structure, which is going to be from this level over here, from the 3805. So if we look at this from a lower time frame perspective, we can say the 1 minute time frame, which looks even cleaner. If we look at this on a 1 minute time frame perspective, this is pretty much where price action started changing the character from a bearish market to a bullish market, right? So keep in mind with the notes, we're still overall bullish. Price action just had a retracement to pretty much retest a major demand zone, right? Now, whenever we had that retracement, just look at the market structure. We went from creating higher highs to higher lows to then creating lower lows and lower highs. We came back, we grabbed liquidity sweep, we retraced from that demand zone, which is from around the 37, we can say 37.95 to the 38.05, right? So this is pretty much where price action started having that retracement. We had the reaction of the demand zone, and this is exactly where we first had the break of structure. So you guys can see the previous lower highs point from this point over here to this point over here, which is set around the 38.05. We broke out of it, we created a new high. So very simple, look at this. We have lower high structure right over here, and then we also have a new high structure. We have lower low structure right over here, and then we have a higher low structure right over here. This over here is going to be considered as a higher high. So you guys can see the break of structure and as well the change of structure. Very simple, basic logic, right? So again, a full liquidity sweep towards the downside, reaction of the demand zone, the switch of structure from a bearish market to a bullish market. And now we also waited for the second break of structure, which is exactly where I entered the market. So I entered the market of the second break of structure, which is going to be in this case over here. If we look at the second unbroken structure, we go into a 5 minute time frame. perspective, what do we have right over here? From this point over here, we can say from the 38.10 all the way to the 38.14, 38.15. We have a bullish fair value gap right over here where price action broke above it. All we simply waited for was for price action to have a retracement towards it. So we entered the market twice today. We entered the market right over here at 38.12, which we managed to secure 80 pips, which was this entire move towards the upside. Price action came back. This is where I told everyone, hey, this zone over here is still valid. I do see that price action is still respecting and reacting off this, this fair value gap right over here. There's a chance that price action can go 80 pips, stop us at a break even and go back into profit, right? So that's exactly why I told everyone, hey, if we get stopped at a break even, I'm gonna re-enter this trade. So make sure you guys set up the limit. Price action comes up 80 pips, comes back, retests this fair value gap one more time, trigger our limit. Price action triggers our entry, and we perfectly hit our final take profit, which was a 1-3. Our stop loss was placed underneath the previous lows over here, which is going to be around the 38.4, and our take profit was set above these highs over here, which was the previous day's highs, which is going to be exactly right over here at 38.36. And as you guys can see, price action perfectly had the reaction of that major demand zone. We got the perfect entry and the perfect exit. We also had a sell zone marked up over here since price action has broken underneath these previous days lows over here. So there was also a high probability chance of price action having that retracement and showing us that market is no longer in a bullish market. We can start retracement towards a bearish market, but that was not the case today. So the sell was invalid. We noticed that price action broke above. We got the retracement, this previous day's highs over here, which was areas of resistance, then managed to turn into an area of support. This is where price pushed the market even higher. Now we were able to capitalize off this imbalance move towards the upside off the reaction of this demand zone. So very simple setup, very easy trade, and very good way to close out the month. That's pretty much it, guys, for this breakdown video. I hope you guys enjoyed this breakdown. I hope you guys understand every single concept and why we were able to capitalize off this move. If you have any questions, feel free to always comment down below, or you guys can always text me privately through Instagram or through Telegram. I'll see you guys in the next one.